Welcome to Tech Tank Titans, where you will find the latest videos on technology and stock market related news. Be sure to subscribe and hit that notification bell because you don't want to miss out on the videos coming up. Whether you're new to the world of crypto stock or you're looking to increase your portfolio, there are a few key strategies that can help you make the most of your investments. Watch this video to discover how to diversify your investments and take profits while avoiding scams. Investing in crypto may sound like a good idea at first, but you need to take into account the risk and volatility involved. As an example, if you're a long-term investor, you're probably not going to see a huge profit from purchasing a token such as XRP that doesn't have any cash flow. Instead, you'll likely make money by investing in a dividend-paying crypto or using an exchange to convert your coins into other assets. For many traders, the crypto market is a minefield. Having a clear and concise game plan can help you stick to your goals and avoid the pitfalls. It is important to have an eye for the market and a keen sense of when to sell. Selling too soon is a common mistake. This is particularly true in the volatile and often unpredictable world of cryptocurrencies. To maximize your returns, you'll need to diversify your portfolio. By spreading your investment across a variety of cryptocurrencies and other assets, you can lessen your exposure to price fluctuations and ride the ups and downs of the market. If you're interested in a more long-term approach, consider buying smaller amounts of BTC and storing some of it in a cold storage. This way, you'll have a steady stream of income while still minimizing your exposure to market changes. Many people have made profits from crypto, however, some have not been able to get the most out of their investments. Taking the time to learn about the basics can help you avoid making a mistake that could cost you a fortune. The most expensive way to get started is to research in the companies and cryptocurrencies you're considering. You should also renew the company's annual report and look for other resources for more information. You'll also want to use the tools available to track your coins' prices. These will allow you to make more informed decisions when it comes to taking profits. Finally, don't forget to use a stop-loss order to protect your gains. In particular, you'll want to be sure you'll have a stop-loss set above the 200-day moving average. If you're an investor looking to make money with crypto stock, diversification is essential. Having a diverse portfolio can help you protect your investments from any volatility. It can also smooth out inevitable peaks and valleys that may come with investing. A good start for a diversified portfolio is to invest in several asset classes such as stocks, bonds, and mutual funds. ETFs are another popular way to diversify. These investment vehicles usually have low fees and are a good way to get started. Another way to diversify is to buy dividend stocks. These companies pay their shareholder a set amount of dividend each month. This can be a great way to maximize your profits. Adding a few stable coins to your portfolio can reduce the risk of losing all of your money. Stable coins are often a good place to go when the crypto market is in a downturn. The market is volatile and can be tough to predict. The best cryptocurrencies have been experiencing significant price swings over the past year. The best ones will continue to experience similar price swings in the future. Diversification has been the cornerstone of investing success for millions of people. However, it can be taken too far. You can end up putting all of your eggs in one basket. There are a few ways to diversify your crypto assets, however. One of the most important things to keep in mind when diversifying your portfolio is price correlation. Low correlation means that a particular investment will offset any moves made by another asset class. A good rule to follow is the 80-20 blend. An 80% portfolio should be invested in the biggest cryptocurrencies, while the rest should be split among mid-cap and low-cap cryptos. Using this ratio can limit liquidity issues and provide you with a hefty profit when the crypto market surges. Another way to diversify is to add fixed income funds. Fixed income funds can help you hedge against any potential market volatility. Finally, a diversified crypto portfolio needs to be rebalanced from time to time. This can mean buying and selling different coins. For instance, you might convert a portion of your BTC to another cryptocurrencies. Rebalancing your portfolio can help you stay on track with your long-term plan. If you're looking to invest in cryptocurrency, it is important to take steps to protect yourself from fraudsters. There are a number of common scams that you should be aware of. Some of the most popular scams are SIM swapping, robotexts, and airdropping. These are all fraudulent methods that will trick you into transferring your money into an account. You should always use an online payment method that offers buyer protection. Another scam is a pump and dump scheme. This is when a group of traders spreads fake information and lures people into investing in their project. It is illegal in the stock market, but it occurs more frequently in the unregulated investment market. One of the most effective ways to avoid these scams is to stay informed. You can get a lot of information about these fraudulent schemes from credible sources such as government agencies and law enforcement. Fraudsters often use high-pressure tactics to pressure victims into making an investment. Scams can also start with unsolicited phone calls. Never respond to cold calls or give out personal information to unknown callers. Another common scam is a fraudulent website. These can be standalone sites or unlawful overlays on legitimate sites. Scammers will use fake addresses to entice you into registering with them. They will also offer you false material and ask for a non-refundable fee. A scammer may also send you a text that appears to be an official request. The person behind the text will often ask you to provide an authorization code. Once you enter the code, they will take you to a fraudulent website where they will ask you to pay for the product or service. It is also important to know the history of the business. Check if it has ever been fined or had a disciplinary history. You should also keep a record of all your transactions. This will help you prevent further losses. If you're not sure whether you are dealing with a legitimate business, you can check the Better Business Bureau or the Federal Trade Commissions for information. If you're interested in investing in cryptocurrencies, you will need to do some analysis to see what the performance of your asset is. The goal is to determine how much your asset is worth. This can be accomplished by using fundamental analysis. Fundamental analysis will look at external factors that influence the value of the asset, such as supply and demand, and a domestic and global economic environment. Technical indicators can also be used to supplement the fundamentals. Some key metrics to look at include the price, the market cap, the white paper, the use cases, the trading volume, and the creator of the currency. These metrics can help you make smart decisions. You should also take into consideration the competitive landscape and the domestic and global economic environment. You can choose to ignore the cryptocurrencies and just invest in the stock market, or you can embrace them as a part of a balanced portfolio. Investing in cryptocurrencies can be riskier than investing in other assets, so be sure to understand the fundamentals. It's not a bad idea to use technical indicators in combination with the fundamentals to make a sound investment decision. For videos like this and much more, don't forget to subscribe to our channel and hit that notification bell because you don't want to miss out on any of the upcoming videos. Thanks for watching Tech Tank Titans. See you in the next one.